Hi, everybody. Welcome back to the Always Bookkeeping YouTube channel. My name is Alana, and today I'm sitting down with one of the owners of Always Bookkeeping, Tony Duong. Hi, Tony.
Hi, Alana. How are you?
I'm great. How are you?
I'm good. Ready for another episode for our clients here.
Yeah, me too. I'm really excited about the topic.
Oh, today's topic is one of the most asked questions, and we explain it to our clients a lot every week. So
excellent. We're talking about cash flow versus profit.
That's it.
Perfect. Well, why don't you just jump right in and take us through it?
Okay, so today we're going to talk about profit versus cash flow. So a lot of our clients ask us this question every week, every monthly meeting. Like we make a profit this month. I don't see the cash in our bank account. What happened? And today we're going to be talking about, the difference between profit versus cash flow and how you should read your financial statements.
Fantastic. So what is the difference between profit and cash flow?
So profit is accounting term. So what is profit? Profit is your revenue versus minus your cost of goods sold expenses, minus all your other expenses. And then at the bottom line, you get your net profit. And cash flow is the money that comes in and goes out of your bank account every day, every month, every week. So that's the difference. So for example, the client invoiced their customers $10,000 this month, or whatever the amount is, and they minus all the expenses, and at the bottom line they profit $10,000, and they think that their account should have $10,000 in the checking account, but that's usually not always the case, just because there are certain line items that you have to pay for, but do not show up on the profit and loss statement. Okay.
And so it's like the difference between a business owner being like, I made a sale, they gave me $100. Why can't I put $100 in my pocket?
That's right.
Okay. I do hear that from some of the clients that I work with. They're like, I don't understand this. So you're going to be kind of helping us understand.
That's right. Helping you guys understand, profit doesn't necessarily mean cash in your bank. And yeah.
Excellent. So a question that I have for you, Tony, is how can a business show profit but be broke?
So that's the main reason that a lot of new business owner go broke and the business don't work out, not because they don't have enough income, but because they have cash flow problem. So for example, we're going to use an electrician as an example today. Is they invoice their customers $10,000 this month, and the money hasn't hit the bank account yet, maybe because the job hasn't been finished, or they have a term on their invoice, whether that be 30 days invoice, 60 days invoice, or 90 days invoice. And on the profit and loss statement, it shows that revenue is $10,000 minus all expenses, net profit, whatever the amount may be. But because you haven't yet paid for it, the bank account doesn't show that profit in your checking account, even though it's show that you profit on the P&L.
Okay.
And another problem that our clients see all the time is that there are certain items that don't show on the profit and loss, but you have to pay for regardless if you make money or not. So.
All right.
Yeah.
Are there some other world life examples of this?
The example would be a lot of business owners start their business with a bank loan or a family loan, or when you buy certain equipments or computers for the business, they have to pay off that loan every month. So they pay off the principal amount, they pay off the interest amount, or another case would be their shareholder draw. So those expenses don't show on a P&L, but it's shown on a balance sheet. That affects your cash flow. So you net profit $5,000, for example, from an electrician, but then you pay yourself $2,000. You pay your loan $1,000. You pay your equipment rental or the purchase for your equipment $1,000. So all your expenses that don't show on a P&L, you have to pay for. So $5,000 profit, you pay for all the expenses. You net zero on the cash cash flow.
Okay.
So your checking account for your business doesn't go up just because it shows $5,000 profit doesn't mean that it go up by 5,000. You have to pay for all the expenses. So at the end of the month, your checking account doesn't show any improvement. That's the reason why.
Okay, so you're turning a profit, but you're paying the expenses at the same time.
Exactly.
All right. So Tony, another question that I have is why do growing businesses often have worse cash flow?
So this is kind of backward and funny at the same time, just because clients are asking us, hey, we're building more, we are bringing more revenue than ever, but why do we still feel broke on a monthly basis? It's because they don't have money in the bank account.
Right.
The main reason is when you grow too fast, you would hire more employees. Mm-hmm. You have more expenses on hand. So whether that be you buy more inventory, you buy more equipment, you buy more computers, and all those cost money. So you have to pay for them, whether that be cash upfront or you have a payment plan for all those upgrade that you do for your business. So every month, whether that be, you buy a new building, you have to pay for the mortgage, that cash coming out. And then when you hire more staff, you have to pay the staff every bi-weekly. So you pay them to do the work. If you're a trade person like an electrician, then you pay for the journeyman, you pay for, estimator, all these expenses. And when you have employee, you have to also take in consideration that you have to pay for the source deduction. So when you run payroll for your employees, that is an obligation that you have to pay for on a monthly basis. Mm-hmm. So that would be paying for CPP, employees portion, EI, health benefits, and all that costs money on a monthly basis. And another problem that hurt your cash flow is you invoice too late. You don't follow up on payments from your customers. You have way too long of a period. So net 30, net 60, net 90, or you don't take deposits or progress payments. What does that mean? That means that let's say you're a contractor for a house. You build a house. You have to spend all the money on the material. You spend the money on the guys who get the work done, but you don't get paid from the clients yet. So a way to fix that would be getting a deposit, whether that be 50% of the project costs or progress payments. So let's say you finish a bathroom, you would get paid a portion amount of the total invoice for that. You finish the kitchen, you get paid for a portion of that total invoice. So that would help you fund the project without using your capital and hurt your cash flow on a monthly basis. So those are the things that a lot of clients run into where they have, like I said, obligations on a monthly basis they have to pay for. And even though your net profit show a positive amount, your cash flow may show a negative amount.
Okay. So what should business owners track instead of just profit?
So they should track your obligation. So how much is your monthly mortgage? How much is your monthly payroll amount? How much is your monthly CRA obligation? So whether that be GST, payroll, corporate tax. So you have to know your numbers pretty well and accurately so you can forecast your cash flow on a monthly basis or at least on the project basis.
And how do you fix the cash flow problem?
So the cash flow problem you can fix by, having a dedicated person that do with AR. So calling the late paying customers, have the customer pay for, deposits, and then have a lower or shorter term for your invoicing. So due on receipt is usually what we recommend our client. So you issue an invoice and you issue an invoice as soon as possible. As you do an estimate, you send out an invoice same day, and you get the payment from the client within, at least 24 to 48 hours. So that would help with the cash flow.
And is it true that the longer an invoice is outstanding, the harder it is to collect?
That's right. So usually we look at the 90 days and over with our clients on a monthly basis. We check in with them. Have you checked into these customer recently? Are they going to be paying you, or are we going to have to write these off as bad debts? And the longer they are, the harder it is for you to collect them, just because stats say that it's pretty hard to collect really old invoice, especially 90 days and over. So that really hurt your cash flow just because you basically did the job for free without getting ever paid for it.
Right. That's huge.
Mm-hmm. And you still have to pay for your employees, for your subcontractor, just because the work is done. And as a responsible business owner, you pay for your employees and not getting paid from the clients for the job.
That sounds like it's a really important task to do.
Exactly. Getting paid, call your clients, getting paid for the job that you finish, and you finish it in time, on time, and you did a great job, so you should get paid for them.
Well, I learned a whole lot today, Tony. What would you say the main takeaways of this video would be?
So the main takeaway would be don't misunderstand between profit and cash flow. Have a cash flow forecast so you know exactly how much you need to pay on a monthly basis, and meet with your bookkeeper or accountant on a monthly basis to look over the numbers. Just because we know that as a business owner, you want to focus on growing the business more. Sometimes you don't want to look at the numbers just because they are confusing, they are hard to understand, and there are multiple statements you have to look at. So have that meeting with your bookkeeper regularly so that you don't run into the cash flow problem. And most of the time, the business don't fail because of the income level. They fail because they run out of cash. So
excellent. So is that something that Always Bookkeeping can help clients with, is the projections and the reports that they need to avoid running out of money?
For sure. At Always Bookkeeping, we offer the monthly meeting with our business owner. So we meet with them on the monthly basis, look at all the statements that we think the business owner should look at. So the P&L, the balance sheet, so that's the cash flow statement. And then we forecast whether they are standing at a position where they won't run out of cash within the next 6 months, 12 months, and that would help them with projecting whether the business is going in the right direction or going the wrong direction.
Excellent. So if you are a business owner out there and you're wondering why you're collecting all of this money, but you still don't have money in the bank and you wonder where that money is going, contact Always Bookkeeping. They can help you out. And how do they make an appointment at Always?
You can reach out to us at alwaysbookkeeping.ca. So www.alwaysbookkeeping.ca. You can give us a call, 780-554-8356, or you can email us at info@alwaysbookkeeping.ca. And the first meeting is free. So just meet with us for 15 minutes, half an hour. We have a discussion with you, what you need, and plan out how we can help you.
If you like today's topic, please hit the like button below. Comment if you have a question, and Tony will either answer it or we'll make another video for it. If you know a business owner who's struggling with cash flow, please send them this video.